We meet in an hour of change and challenge, in a decade of hope and fear, in an age of both knowledge and ignorance. If this capsule history of our progress teaches us anything, it is that man in his quest for knowledge and progress is determined and cannot be deterred. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win.
So we are here today with Kara Mangone, who is the Global Head of Climate Strategy at Goldman Sachs. Kara, welcome to Energy Impact.
Thank you, Brad. It's great to be here.
Yeah, absolutely. I mean, listen, Goldman Sachs needs no introduction. Climate, everyone on this podcast, the audience of this podcast is going to love it. But before we get into modern topics, let's talk about you, your past, where you grew up, and how you got into the sector.
Awesome. Sounds great. So excited to be here. So look, what got me into finance and then eventually into sustainable finance was a pretty similar mix of things, which I think is being very fortunate, right place, right time, a level of just being very fascinated and interested in the space. And then I think thirdly, really hungry to learn. I should start by saying I don't have a traditional energy or climate background, actually. And there are times when it's quite a steep learning curve and has been a steep learning curve, but actually that's what has, I think, kept me so excited and engaged and really humbled to be working in this space. Maybe to walk it back a little bit, in undergrad, I studied English, business, English, finance, and Italian, of all things. I was an Italian minor.
Because you have an Italian background.
I do. Yeah, exactly. Italian American.
And did you ever spend any time there growing up, or?
I did a little bit. Yeah, I spent actually during college, I spent a couple of months there, which despite many years of studying it, it actually was not until I ended up living there that I was actually able to really master it. And I grew up around Italian dialect. My family's from Southern Italy, but textbook Italian is quite different. And so it was an incredible experience to be able to be there and learn it. And I think like what that, probably shows a little bit is I just have a very sort of disciplinary sort of nature to me and to my interests. And so I think that was a little bit of what ultimately brought me into finance and sustainable finance. And the second thing is, I've always sort of liked to be push myself sort of on the edge of my comfort zone a little bit more. So I played competitive soccer growing up and, had a couple of different options of what to do for undergrad, and ultimately decided to walk on at a very strong D1 program, which was, a very difficult, hard couple of years, but was ultimately, a tremendous amount of growth for me personally in my game, but also just really as an individual. And so I think that sort of grounding for me too, both of those things in combo. I think originally I had thought maybe I'll do corporate law with that kind of mix of finance and English, or journalism. Potentially also, we'll get there at one point, who knows? But I think I just sort of wasn't quite ready to catapult into those when I was graduating. And I decided to try for a banking analyst job at Goldman Sachs. Again, thought it was out of my reach, thought it would push me on, sort of at the edge of my comfort zone. And I somehow got it. And so that's really where I started my career. It could not have been a more dynamic place to start. I joined into a group that at the time was called the Mergers Leadership Group, which is still a really important part of our banking franchise. And that is where we advise clients who are facing hostile M&A or shareholder activism.
And so can you double click on that a little bit? Because, and this is just my ignorance, okay? So shareholder activism, whenever I hear that, like, okay, this, the shareholder group is, causing a ruckus, you look at their ownership, it's like 5% or something. How did they, I don't understand, how do they have enough ownership to actually move the needle?
It's a very good question. And a lot of it comes from the influence that you can gain with other shareholders, right? And so I think this, to be honest, this is actually the two big impressions that I had after working in this. Obviously, I was junior in my career, I just started, but I was doing it, I should also note, I was doing it right sort of pre and post financial crisis. So an incredible amount of volatility, for a lot of these companies, valuations just like dipping significantly. And the two things that it really taught me were, one, the importance of your relationship as a public company with your stakeholders. You could say the same, right, for any sort of private companies as well. But in that world where I was dealing with, these are publicly traded companies. That was one. And we'll talk a lot about this, I'm sure, during the course of the conversation. The second was how important it is to have a really clear, articulated strategy to the market that resonates and that's supported by like KPIs and a track record of performance.
KPI for our non-business group is key performance indicators.
Yeah, key performance indicators. And so, I think ultimately to your question, what can happen is, as a hedge fund accumulates a stake, it may seem small, but they are effectively presenting an alternative narrative or thesis, right? Investment thesis on a company or on a stock. And, if you can get other shareholders on your side, then ultimately, these can play out in sometimes they settle, but ultimately they can play out in pretty public ways. And so often we'll go to a public shareholder vote. And if you have majority support, then those things will pass. And, I should note when I started, I really wasn't focused on, it wasn't environmental issues that were really playing out, on the public stage in this way. But interestingly, that team now at the firm, there are a lot of corporate clients that we advise who are facing, right, really significant levels of, I'd say sometimes big A activism or hedge fund activism, which is where I started, but also just kind of smaller A, which is just, shareholder proposals, right, and on environmental issues and things like that. So that's really where, that's really how I got into finance and into the firm and where I started my career. And after that, again, sort of, I think combo of being really fortunate, but also just being really fascinated and wanting to learn more, I had the opportunity to move to our investor relations team and spent about 10 years there managing relationships with the firm's investors, debt investors, equity investors, who are focused on ESG and sustainability.
And what types of institutions are these investors? Can you describe them to us? These debt investors, these equity investors?
Yeah, so it's both. So this is, large passives like BlackRock and Vanguard and State Street who own us. It could be large active investors like Fidelity, Dodge and Cox. And then it could be, PIMCO, bondholders. But then it also can be, smaller investors. And this is actually when I first started in investor relations, a lot of the real pioneers in this space were a lot of the smaller, socially responsible investors or faith-based investors. I spent a ton of time with a group called the Interfaith Center for Corporate Responsibility, which is a group of faith-based investors, and just had, very thoughtful and had done a lot of research on different issues around human rights and business standards and, climate and food impacts. And so it really was super wide ranging. And then over time, I would say, at the point when I really left IR and moved to this seat, I also was spending time with what I would call sort of influencers, which are proxy advisory firms or, firms that actually rate companies on ESG. So a really, really wide-ranging set of constituents.
And just help us understand, because like from the outside, it might be obvious to you, but from the outside looking in, just the word investors and like, so, because as far as I understand, so Goldman will hold on to other people's money and invest it, right? But then also people own Goldman itself. Is that right?
Yes, good question. Yeah, so where I was sitting is in think of it sort of the corporate, Goldman Sachs corporate, sort of if you were to go up on sort of Yahoo Finance and look at who owns, or the SEC, this is what I used to do in my old seat when I first started, look in the SEC filings and look into the shareholder registry. you will see a lot of the big institutional investors who own Goldman Sachs.
I see.
In their portfolio. And those are really, really wide ranging. And there's some that, you have kind of your largest public holders, but then you have some who are quite active in sustainability and ESG who may not, show up as a top 20 investor, but are very sort of influential and thoughtful and we engage with as well. But then the flip side of it, and this is actually starting to get into our sustainable finance model, which is really unique, we are also spending time with many of those institutional investors as clients of the firm, right? So
I see. Wait, so it goes both ways. There could be a big company that owns shares in the entity that is Goldman, but then Goldman independently manages a bucket of money of theirs that doesn't own them, but they invest it to make the Goldman brand more valuable.
Yeah, exactly.
And also sorry, not Goldman, to
not
make
Goldman
their
brand.
money more valuable, increase their money, but then also collect a fee, which then makes Goldman more valuable as well.
Yes, exactly. It's not, I wouldn't say it's investing in the brand of Goldman Sachs, but
sorry, just the entity that is.
Yeah. I mean, there are investors that hold us as part of their portfolio. And then there are a lot of institutional investors and corporates, asset owners, pension funds, right? Like a CalPERS or CalSTRS, they hold Goldman Sachs on behalf of their constituents, pensioners. But then we advise them as clients of the firm as well, and how to think about integrating, climate and other considerations into their portfolio. So it's a really symbiotic relationship. And actually it's really interesting because a lot of the corporate clients that I spend time with, even though my role is very, sort of corporate strategy from the climate perspective, right? I'm very sort of strategy focused for the firm. A lot of the corporate clients that I spend time with, they really want to know, what is it like to build an engagement program with shareholders and investors over 10 years? And what is it like the other part of my portfolio is our sustainability reporting. What is it like to put together a sustainability report? How do you know which disclosure frameworks? We don't have required sustainability reporting, mandatory sustainability reporting here in the US. So how do you figure out what those what those pieces of knowledge and insights are?
I see. And just to clarify, because now I think if I'm getting this right, there's this third way that an organization can interact with Goldman. And that's, I think you mentioned advising. So Goldman will not necessarily directly manage money for, let's say, a pension fund, but will act as a consultant to teach them how to manage their own money. Is that right?
You can do it in a lot of different ways. So our business cuts across, and by the way, our sustainable finance business actually replicates our core business, this kind of same strategy we have in our core business, which is we have our asset management business, where we're advising clients, where we're managing their assets, right? Investing on their behalf. We have our investment banking business, where we're advising corporate clients, we're helping to finance if they want to go to the public markets, if they have an acquisition that they need to finance, if they want to, IPO and become a public company, we have that part of our business. We have our global markets business, where we're working with institutional, investors and providing liquidity and trading and advice for those solutions. And then also now a growing consumer and wealth management business as well, which includes focusing, very much on the individual. And so our sustainable finance footprint actually cuts across all of those areas, which is really, really cool and really interesting. And I know one of the topics we're going to get to, so I'm probably front running it here, is kind of what has changed, right, in financial institutions' approach to sustainable finance over time. And I can say, obviously, I can speak closest to the Goldman Sachs approach, but really it's been kind of this broadening and deepening of the pockets of expertise and insight and activity and capabilities that we can bring on sustainable finance that really mirrors, how we've grown our business strategy broadly. And so that's both in terms of sort of thematic depth. So our commitment, cuts across, we have a $750 billion commitment to finance, invest, and advise in sustainable finance by 2030. That cuts across all of those businesses I mentioned. It also cuts thematically across climate transition and inclusive growth. And so climate transition, including, clean energy and ecosystem services and sustainable, transport, sustainable food and agriculture, but then inclusive growth, which includes investing in communities. It includes healthcare, it includes financial inclusion, areas and investments where we're working with companies who are, have an impact thesis around increasing affordability or increasing access or value of service.
And how did you guys come up with that number, 750 billion? Like, what at that point, why not $1 trillion?
It's a great question. That was, by and large, the most significant sustainable finance, target commitment on the street, by multiples, when we came out with it in the end of 2019. And I think the number is important. We did 156 billion in our first year, actually, of the target. And so, that for us was just
156 billion in the first year. And what year was that?
The first year. That was this past 2020.
So just multiply that by 10. You'll hit a trillion by 2030 then?
Yeah, we'll see. But look, I think the number got a lot of attention because it was so big. But I think the second thing that got a lot of attention was actually, we announced it in an op-ed. It was an op-ed from David Solomon, our CEO. And I think what got a lot of attention was the rationale, which was sustainable finance, in particular, these two secular themes, focused on climate and inclusive growth, are going to be are today and are only going to accelerate in terms of being drivers for markets and economies. And this is really about risk, and this is about where there's value. This is about opportunity. And it was very values light, if you will. Values are important in this space, of course, to a lot of constituents, individuals. We think about that a lot here at Goldman Sachs. If you think about where we've, chosen to have partnerships and allocate capital and philanthropic capital, but this is a commercial commitment. That $750 billion commitment does not include any philanthropic capital. That's a commercial commitment. And so what that tells you was really this view that our clients, we as an organization, our clients, this is coming up in boardrooms. This was coming up for David in meetings with investors. And this is really something that is about value now for a lot of our clients.
So since you guys are so wide ranging, you've got very different, you got a different set of tools and instruments to be able to help promote sustainability. And you've have a lot of experience, and you guys, have touched all sorts of different types of assets. You got huge teams. From your perspective, having seen all of that and having all of this access that other institutions might not, what do you guys think moves the needle the most?
So there's a couple of things that we found to be really important in advancing, sort of climate goals and inclusive growth goals. One is how you ground your approach as an organization. And so that means, and by the way, this is not an easy thing to do. I can say this wearing the sort of corporate hat for Goldman Sachs on climate. I can say this spending time with corporates and investors. This, Brett, from spending time, and I've listened to a bunch of, the interviews you've had, this space is filled with acronyms, right?
I had to make you spell one out earlier. I know, it's terrible. It's terrible. I'm on a war against acronyms.
PPA, PPAs, ESG, GHG. I mean, it is just filled with acronyms. Yeah. So it can be, one, super disorienting. Yeah. Two, we're largely operating in sort of a voluntary, framework, if you will, sort of place in terms of disclosure. And so ultimately, there's a lot of questions we get around, I have a commitment, but where should I put it? And how should I describe it? And what should my KPI be? And is this a good enough KPI, right? And so I think that grounding is often where we advise our clients to start. It's how we started, which is, our purpose as a company is to advance sustainable economic growth and financial opportunity. And having that clear sense of what your purpose is as a company, and you can be, this isn't just a statement for the greenest of green companies, right? This is wherever your organization is, figuring out, starting with your purpose, and then really peeling back the onion and saying, okay, where are the pockets of my business where ESG and sustainability shows up, where it's actually a material, relevant risk for me to be managing? That may be, in terms of your operations, that may be your ways that you can, heat your buildings more efficiently. Right? It could come up in the way that you think about the potential for transition risk on your business. This is a term that we talk about a lot in sort of the climate risk space, right? As we think about
what drives transition risk specifically, is it that the laws will change underneath your feet, and if you're not ready for it, you're going to incur some cost?
That could be a component. The concept of transition risk, and there's usually these two buckets we talk about, transition risk and physical risk. The concept of transition risk is very much that there could be changes to policy. There could be economic factors that change, right? But as those things go into place, how then is your business and your assets, it could be your real estate portfolio, et cetera, how are those assets going to be impacted? So if there is a price on carbon that's put into place, for example, what happens to the credit profile of, certain companies that you invest in or that you lend in? Then what happens based on their credit profile? What happens to, their how they trade in the public markets, et cetera? And then is there a potential financial impact to your business from that activity? So that's an important piece. So I think that is the frame that we often advise clients, is think about this in the same way you would like a financial risk, right? It's almost like take like almost the ESG acronym out of it and just think about it through the lens of your sort of traditional, is this, cost? Can I increase returns? And then the third bucket is really opportunity. Like, can I actually drive alpha from this activity? So that's the first one we start with, is really how you ground it. The second is how you operationalize it within the organization. And we've had a longstanding approach to climate. Our first sort of environmental policy framework that we put out that underscores our approach and describes our philosophy on these issues was all the way in 2005. So we've been at this for a long time. But this $750 billion commitment, was 2019. And that was really our opportunity to operationalize this across the firm, within our businesses. And we learned a lot from that process. And so that's a big question we get, is how do you actually do that within the organization? And then how does that interact with all of the sort of external facing pieces you have, your reporting, your engagement with stakeholders, all of that. So that's the third piece, is then how do you ground it? How do you set it up? But then how do you tell your story? And so that's usually the conversation that we have with clients. And it's getting more and more sophisticated. That's the one thing I'll say is, asset managers, asset owners, corporate clients are getting very, very good at this and very sophisticated in the way. And, many of them you've interviewed, but just, a lot of deep expertise now, within the walls of a lot of, private sector institutions. And I think that's really helped to advance this space as well, which, to be fair, has gotten its fair share of criticisms of just being like a lot of talk or jargon or acronyms.
Or greenwashing. I see a lot of greenwashing, like people, saying they make these like grandiose commitments, but then saying they satisfy them. But then if it's not really held to like a high ESG metric, it's hard to, if you take an objective look at it, maybe they didn't really achieve those goals. That's what I'm afraid of. I'm afraid that we're going to see just a ton of greenwashing, and I'd like to, and maybe even pick your brain, like strategically, how do we avoid that?
Yeah, no, it's definitely an important issue. And I think the one thing I'll say is most of our corporate clients and investors, like, they are very attuned to it. Like, they don't want to be accused of greenwashing. And so I think there's certain things that we can learn from in this space. So, if you think about the green bond or social bond, sustainability bond, financing markets, which, by the way, we've seen record levels of volumes. This year, we already we've exceeded what we did all of last year in terms of sustainable debt issuance year to date.
And just to clarify, when you say financing, you mean debt only, or do you mean any part of the capital stack?
So I mean, for sustainable debt financing, I mean either green bonds, social bonds, or sustainability bonds, which are green plus social. So these are corporates who are issuing a bond, who are ring fencing the proceeds towards either a green project. It could be, operational efficiency, or it could be, social project, investing in communities, increasing the diversity of your supply chain, things like that. And we actually went through this process this year. We issued our first sustainability bond issuance as a firm. So in that space, there is a pretty clear established framework for what sort of counts, if you will. It's ICMA's green bond principles, and there's social bonds, sustainability bond principles as well. And that framework is really useful because it has guidance of sort of what you would need to adhere to be compliant with those. And the market really likes that. And I think that's been a helpful, you can't just pick any KPI you want. You have to actually go through this process and vet it with a second party opinion. And I think institutional investors have really responded well to that, and corporates have responded well to that. And I think that's why you've seen this rapid acceleration. We've also seen these bonds price on average 5 to 10 basis points tighter than traditional bond issuance. So back to this values point, that part, like what we're seeing from clients is not that we're saying to them, oh, you should go and issue a green bond. We're actually getting a lot of, like, vice versa. Should I be issuing, can I get diversification? I think I have a good story to tell, et cetera. So I think
when you say 5 to 10 basis points tighter, do you mean that that's because there's more demand out there for them?
Exactly.
Okay.
Yeah, exactly. But look, there's parts of the market. So I think there's things like that where we can learn, where we can learn from, to your question, which is, anytime you can have a set of kind of clear standards, comparability, all of those things will help. But, the climate challenge is really big, and, the role, the opportunity that the private sector has, therefore, is quite substantial. And, there's an area that, that we're spending a lot of time on in terms of transition, right? Climate transition. And I know this is one of the questions that you want to get to too, around what kind of role financial institutions, and Goldman Sachs in particular, can play around net zero. And, one of the, just to give you a little bit of a frame, we were part of a report along with a group of financial institutions at the end of last year that looked at the financing needs, or like the investment needs required to actually achieve the goals of the Paris Agreement. And the capital investment that was estimated as part of that process, and we worked with the Global Financial Markets Association and BCG on this, is 100 to 150 trillion.
Yeah, insane.
Right, it's like astronomical, yeah. Right?
And that's not an overestimate either. Like, that's like legit, like that is like a legit analysis. It's not just people pulling a number. Like, that is like, that just speaks to the literal magnitude of the problem.
Right, no, absolutely. And I think interestingly, when you look into, part of what that report does is we look into what's the composition of that investment need. And there's a couple of interesting things. One is, there's about 10 sectors that account for roughly 75% of GHG emissions globally.
Okay, and that's what I was hoping to get to when I asked my question earlier. Like, what do you see actually moving the needle? So can we talk about those sectors, and is there something that you do with your clients to kind of like gear them towards those sectors, saying like, listen, if you really want to make a difference, it's like cement, like figure out a way to invest in green cement companies, or is that like part of the strategy?
Well, that's the big question is, for us, the way we think about this, the starting point is, where are we best positioned as an institution to address global climate goals, right? We don't produce batteries, like we don't produce, like, so where are we really best positioned?
But you kind of do if you invest in a company that produces batteries, yeah.
Exactly, which we have. We've invested in Northvolt, which is a Swedish producer of lithium ion batteries.
And what kind of investment is that, and what bucket of your capital does it come from?
That's within asset management.
Okay.
So it's equity investments within asset management. And that's a really cool one because it was about a $1.6 billion investment that we made. We've worked with the company for many years. And part of that collaboration, and this is something we haven't gotten to talk to a lot, but I think is so big in this space, which is actually partnership and collaboration, right? And the ability within the private sector to bring multiple parties together. So not only was that an investment, it's an incredible company, but not only was it that investment, but there was also a lot of work done with partners, including Volkswagen and BMW, to actually figure out how they could structure sort of order commitments to be able to then scale. So that, if you actually know.
And sorry, just to break it down for our audience, when you get those commitments then are something that a financial institution can use to mitigate their risk when they put capital into a project, right?
That's a great point. It's a great point. Like, you know that you have a guaranteed buyer, right? In this case was Volkswagen actually set up a JV. They're building a Northvolt, factory specifically for VW cars.
Let's come back to these sectors that make the. So actually, I don't know if did you read Bill Gates's latest book? He's like a big innovation guy when it comes to climate.
He is, yeah.
And one of the things that I've been like intensely focused on is trying to figure out, where the greatest points of leverage are. And to me, it seems that, and I'm let's say I'm like a techno optimist. We've got all of these emerging technologies that, like, I don't care what any of these companies do, like in terms of commitments. Like, if any of these new battery technologies or materials technologies, if any of these come to fruition and hit the goals that they promised, it's going to dwarf all other efforts in comparison in terms of our goals towards sustainability. So, like, the way I think about it is, like, if you can help finance that first, new chemistry for like electric battery or something, like that's better than financing a factory that just produces, the existing chemistry of lithium ion batteries. Or, you see what I'm saying? How, like, you can have like a greater leverage point if you like inch closer towards the role of venture capitalist than of bank. And I'm wondering if you guys have like an internal analysis or view on that.
It's a great point. I think the reality is, though, that there's just so much capital that's ultimately required. There's so much progress that still needs to be made in the space. And there's some great research that Michele Della Vigna has done around carbonomics, which is sort of one of our research products that specifically looks at the sort of economics, if you will, of the transition. And a lot of that research is very much on this concept of, how can the cost curves ultimately come down across these technologies, which are going to be, to your point, like, that's going to be the crucial piece, because, of the 100 to 150 trillion of capital that we talked about that's required to meet the goals of the Paris Agreement, there is a substantial, subset of that investment need, which is not really at sort of, market rate of return today. And so that either requires public-private collaboration, right, or it requires, sort of concessionary rates of return. And so, look, some of this,
or creating a fund where it's not concessionary, but it's higher risk, higher return,
exactly,
right?
Exactly.
So do you guys talk about that at all? Do you talk about partnering up with your other like big institutions and saying, hey, we're just going to create like $1 billion venture capital fund for climate technologies?
Yeah, I mean, look, there's a lot that we do in this space at different points in the life cycle. One of the areas that we have been really focused on is actually how to do this in emerging markets, because about 55% of the investment need is expected to actually need to flow directly into economies in Asia, markets in Asia. And that's an area where we've announced we're going to work very closely with Bloomberg and the Asian Development Bank to actually figure out how we can potentially pilot some of these, innovative approaches to actually scaling investment in the region. Like, that's going to be a huge part of what's required. And we won't be the only ones involved, right? With the idea would be then we bring a lot of clients and others, to the table. We have, a lot of clients and across our business who are trying to figure this out and see real opportunity. And so I think there's a tremendous amount of opportunity here, but also a high level of complexity, right? And I think to the points you were making before, one of the things that we just feel so strongly about in all of this kind of question around the role that Goldman Sachs and financial institutions can play in net zero, the one thing that's so important is that this doesn't just become a carbon accounting exercise, which if you spend, time in the space like we do, that is a big, question that you get. You have a net zero commitment. What's your interim goals? How do you get there? What's the pathway? Which sectors? What's the emissions reduction? Like that, it's important. But what's arguably the kind of biggest question to be asking is, what is the real economy impact of the work that, you know, each and every one of us is doing? And I think arguably, and we spent a lot of time talking about it today, but I think arguably, given our business strategy, given our footprint globally, given our client base, where we actually can have the largest real economy impact is working with these clients across these different sectors and figuring out the right ways to get capital, you know, to flow, to provide the right advisory expertise, and think about potential innovative, you know, ways that we could do this, whether that's, you know, a blended facility, or whether that is, you know, KPI linked financing, or, you know, or some of the other ideas that, you know, you're throwing around that we should take over to the firm and make sure we hear Brett's ideas, because you have a lot of really good ones.
Well, I just think that, you know, I understand why it's not the case structurally, but I always just, you know, because I now, you know, over the last 10 years, I've gotten more experience with every type of like capital and investment, let's say like graded by risk, you know, all the way from like early estate. Like I was, you know, on the ARPA-E judging panel awarding government grants. You know, in my former life, I've raised, you know, venture capital money for a technology startup. Now I'm working, you know, directly with, you know, corporate banks, development banks, you know, XM, you know, trying to understand how to finance, you know, giant nuclear plants, or, you know, or just new nuclear plants. That can be small ones too. So like, I've gotten to see this whole thing. And to me, it just seems that if there were single institutions that could help bridge the gap between these segments, who had like the vision to see how we can bring something from its, you know, research stage all the way through to, I just think there's so much opportunity there. And I don't see too many institutions who like, I see them dabble. Like I've even seen like private equity companies, you know, make venture capital investments, but that's because like, you know, the managing partner, like, you know, knows the, you know, the founding team or something like that. But to me, I just wish that there were more institutions that that had huge balance sheets to sit on, that were willing to go from zero all the way through to like the world changes, and like see the investment through every step of the way, or pull the pieces in, help pull partners in every step of the way.
Yeah, no, totally. And look, I think in our asset management business, we talked about Northvolt as one of those. Like we get involved in very early stages in some of those situations. They're not always public right away, but that's just such a great one because it actually shows the growth and trajectory, right, to the point where then you're bringing in other partners. And I think to your point, that's where you really start to get the scale. Like that's ultimately what is needed. It's not just an acknowledgement or like sort of an investment. It's actually doing it at scale.
And tell me more. You mentioned something about emerging markets, which also just fascinates me. How did you guys? So you said, was it Asia, Southeast Asia, or Asia? Where was it?
Yeah, so we're looking very closely at South and Southeast Asia. If you think about the sort of capital requirement that I mentioned, the 100 to 150 trillion, estimates are that about 55% will need to be directly invested in Asia, but obviously a lot in South and Southeast Asia. Yeah.
Okay. Well, you jumped my next question. I was like, how do you decide which emerging market? But it seems that like your analysis has shown that's where it's going to happen anyway.
Yeah, it's a tremendously important market. And
can you just like outline like the geographical boundaries? Does that go like Vietnam through Indonesia? Like where is the?
We're not like the work that was done on sort of the estimation was Asia overall.
Okay.
For us, we have a global business, we have a global footprint. And so what we're trying to do with Bloomberg and Asian Development Bank, and talking to a lot of our clients about this as well, is, in a lot of there's a tremendous amount of capital that is focused on this region. But the projects and the investments are not always, at a market rate of return, exactly what we were saying today, right? And then you have other considerations, or geopolitical and other considerations as well, right? Yeah. So I think that's part of the opportunity, if you will. And
then on the deal that you're talking about, that's manifesting itself, you said it was you guys, Bloomberg, and the Asian Development Bank. Is that right?
Yeah. So we've announced a partnership.
How does that come together? Like, why those institutions? And can you just tell me like the origin story? Does this start over a coffee or at a conference, or like who?
It's such a good question, right? This is like how actually a lot of the work gets done in the space, right? So we had, I guess, a couple of things. We had we've done a lot with Bloomberg over many years as part of our sort of economic empowerment program. So he was very closely involved in our 10,000 small businesses program.
Oh, wait, are you talking about Bloomberg, the person or the entity?
Bloomberg, well, just to sort of, this is where it started, was Mike Bloomberg was very involved in that program. And so he knows the firm very well. And his institution, of course, then knows the firm very well. We also, just given our business, a big part of ESG and sustainable finance is knowledge and insights, and Bloomberg has an incredible platform around data. And then we also are part of sort of a coalition initiative that Bloomberg had launched called the Climate Finance Leadership Initiative, which I'm sure you're familiar with, but we were one of the founding banks as part of that. And that very much is a dedicated focus on how you scale, looking at how you scale climate finance in that region. And so there was a lot of sort of research that was put into that process. And now actually sort of the next phase of that is operationalizing that. So picking actually countries and then figuring out how you can pilot some of the sort of recommended approaches. And so some of that is actually converging of a lot of natural work that we had underhand. And look, the Asian Development Bank, there's no one that understands the investment conditions required, some of the upstream work that needs to happen, and understands these conditions better than an institution that works side by side with governments all the time. And so we are incredibly fortunate to have the Asian Development Bank committed and rolling up their sleeves with us. And I'm excited to come back on the podcast and tell you about, our first investment that we're able to announce with them. But it's
cool.
It's exciting. And it's an important, to all the points you're making, it's an important, really important region for all this work.
And what amount of capital are you guys looking to deploy there? What do you think?
We're still exploring, because I think a lot of it will depend on the project, and it'll depend on, this is the starting point, but the idea is we get questions all the time and a lot of interest from our clients of how they can actually, so the idea would be to pool capital together to really scale investment.
Great. I want to just come back to you as an individual for a second, just to kind of here, we started off with how you got into the organization. That was your first job? Was it your first job out of school?
My first job.
And it's the only company you've been at?
That's the only place I've
been. Okay, so you're a lifer. You're the director of Goldman. Okay. So just kind of tell me about just how you've personally risen to this position, and maybe, I know it's hard to brag about yourself, so I'm just gonna force you to do it. You're gonna have to grit your teeth and do it. Just tell me which characteristics it is about you that you think has allowed for continued success. All
right, cool. So it is hard for me to talk about myself. So I am gritting my teeth. We talked about in the beginning how I came into the firm. I then spent about 10 years in investor relations. And for me, that was really formative, because I talked about how stakeholder engagement is so much my frame on ESG and sustainability. And it really is how I ground a lot of my perspective on this work. And that's, I think, because I spent the first phase of my career advising corporates, in the context within which their stakeholders are extremely important in the investor community. And then spending time with our own institutional investors, really listening and learning. That is a huge component of how, progress has been made in this space over the course of many years. I know it's accelerated very recently, and, investment flows into ESG funds is up 10 times relative to, a few years ago. But there's a lot that has happened, which is really sort of an exchange of information and corporates understanding. And now I'm speaking with the Goldman Sachs corporate hat on, not an advisor, corporates understanding, us understanding as an institution, how does, the NGO community think about transition and, adequate pathways, and how do, institutional investors think about which ESG metrics for financial institutions are material or not material, right? And so those are all, that's a really important sort of component, I would say, of what.
And is there a specific forum that you do this like active listening in? Is it primarily on phone calls? Do you meet people in person? I know it's hard to meet people in person recently, but
so in this space, Brett, it's like engagement really is it's like this, dedicated engagement programs that, we built within investor relations. Now I still, there's an incredible team of, folks who now does this within investor relations, where I used to sit. I work closely with them. I have the opportunity to do some of this. If someone wants to go really deep, on our approach to something, I'll have the opportunity to partake in those. But it's broad, right? I mean, it's the investor community, it's, the NGO community. We spend a lot of time with our people, who it won't surprise you, like not, a couple days goes by when I don't get an email from someone saying,
on climate,
like, how can I get involved? Or, what can I saw we have these operational impact goals. What can I do? Have you heard of this organization? I want to work in sustainable finance. And I say, well, lucky for you, like sustainable finance is all over your business, so you can stay right where you are. So I think like that was really an important part and education for me over the course of many years. And then taking on our sustainability reporting was sort of the complementary piece of that, because a lot of the sort of learnings and insights that we would gain, we would then think about in the context of how we would either evolve our policies or business practices or our reporting. So I think, those were all really important. And what that also did was to be able to effectively communicate, because it's in part listening, but we're also communicating to the market and to our shareholders, our approach and our strategy. I had to then become, deeper and deeper into the firm's strategy on sustainability. And then that was a really natural sort of transition for me to, once we announced the $750 billion commitment, to come over and really lead the strategy component of this formally. In terms of like the sort of skill sets or, kind of pieces that I think have helped me, I definitely think the mix that I had sort of mentioned at the beginning, like being really fascinated by this, definitely fortunate because, I had the opportunity to take on the reporting. I will tell you, when I was first asked to do it, I sort of said, really, reporting? Are you sure? Like, is that really something that, that you want someone who's kind of a finance focus, spending time with investors? But like, actually, it couldn't have been, a cooler opportunity for me. And it put me right into the forefront of working with incredible teams around the globe who are working on our operational carbon neutrality program, or working on our approach to climate risk. So it got me like so, deeply connected with all of those folks who are doing amazing work. And then I think it also was just this sort of commitment to staying a bit on the edge of my comfort zone and staying hungry and being really humble about what I knew and I didn't know. And here in this seat, you can't do this without like an incredible, amazing team. So
and talk about some of your colleagues a little bit. I mean, did you have any like mentors or sponsors who kind of like helped pull you up from early career?
Yeah, I've had incredible sponsors at the firm. I mean, this place, obviously I'm biased because this is the only place I worked, right? But I think the sponsorship and mentoring is just incredible. And, I like to think that like some of it was, a lot of it is probably me putting my head down and, showing up and improving myself. But I think, when you do that, you have, an incredible ecosystem of people who are, either throwing you opportunities. So the sustainability report, I actually was given when I got back from my first maternity leave. I have 3 kids under 6. And so that also has been resilient. Like there's been a heavy resilience component to all of this. It's been, going through all of that transition has been awesome, but also hard. Like I love my kiddies, and having work that keeps me really engaged and is hard and is collaborative and gives me the opportunity to work with lots of people is what has kept me, coming back because, it's not an easy thing to do. So I think I've had the mentors, which have been hugely helpful, but I've also had, an incredible team of peers, both within investor relations, and here within the sustainable finance group. So, a big part of of our sort of focus on climate strategy and our climate strategy portfolio is how we think about risk And so I, work very closely with colleagues within our risk division who focus on climate risk. We have an incredible expert on our team, Tim Whitehead, who leads our environmental risk management globally, and just an awesome squad, of folks around me who work on some of the, the partnership work. So it's really been, I think that ecosystem, to be honest, that's helped so much. Like, this is it's a big task at hand. It's exciting, but you cannot do this alone. You need to be in a place that's collaborative to really have impact. And I think that's a big part of what has helped me and why I've stayed as well.
Strategy, how often does it get revisited, revised, and in what setting? Is there like a quarterly meeting, an annual retreat? Like, where is it that you meet with your boss and a few other people to like really say, okay, all ideas are on the table. If we want to switch something, now's the time to bring it up. What format does that take place in?
Oh my gosh, it's such a good question. It's super iterative. Like, it's not a one point in time. It's not a one meeting. Look, I will tell you, like, we spend a lot of time with our management team on climate and sustainable finance. We spend a lot of time with our board on these issues. So I think it is important to have that top of the house, like, focus and interest and oversight and asking hard questions. And so that, there are those natural forums, where a lot of stuff will ultimately get discussed and then approved. But I would say so much of our philosophy and strategy on this is not sitting still. Like, it is, meeting, and part of the heavy focus for us on stakeholder engagement is because that is actually your opportunity to continue to learn. Like, if I have a conversation 6 months ago with someone, they're going to have a different perspective. Like, there's information that's, more readily available 6 months later, right? And markets are evolving quickly in this space. So I think all of those are all the really important pieces. And so I would say the way that it's really done is we have our policies, we have our practices, but then we have all these different opportunities to meet and engage. And then that's how we inform it. And then we have a couple of really public vehicles where we can then communicate to the market. We have an annual sustainability report. We have a climate focused report called our TCFD report, another acronym I'll throw out just to add one more. I think we've hit like 10 acronyms now at this point, Brett. But so, like, there's kind of no shortage of ways that you can communicate this publicly. But I think sometimes it gives the impression that you only do that 2 times a year, when actually it's like a much more dynamic feedback loop, if you will.
Got it. Okay. I've pretty much exhausted your time, but I do want to leave you with the final note. Anything that you just love to share with our audience that we didn't cover so far?
This was great. It was awesome. I mean, I think the last thing I would really say is, I mentioned I have 3 little kids under 6. And one of them big impressions that we didn't cover, but I think is just like, it's something I think about a lot. I don't have an answer, by the way. I'm raising this because I know, Brett, you're going to have an answer. I think the climate challenge can be a little bit inaccessible to the individual. I think especially at, kind of younger ages. And I just think about some of the things that I read articles every way on my way in, right? And it's like, emissions and 2 degrees and like all these things. And so I think just there's an opportunity. There's so much good work that is happening, but I actually think there's this, other complementary opportunity, which is how do you really make this accessible to the individual? Like, it's not lost on me that, I'm doing this at a financial institution, working with a lot of people in the markets, and that's not always really translatable. We're talking about some pretty sophisticated topics. You're really deep on this, but what are the ways that we can translate, a lot of this work and a lot of this conversation to really tangible, like bite-sized pieces, particularly as a mom with young kids. I'm really focused, on that piece. I don't know, maybe it's a podcast for like, the young ones. I don't know, but I'll leave that with you. And thank you. I mean, this has been a great opportunity, and really appreciate, kind of all your insights and ideas as well. I have some good things to take back to the folks at Goldman Sachs.
Awesome. Kara Mangone, everyone.
Our leadership in science and industry, our hopes for peace and security, our obligations to ourselves as well as others, all require us to make this effort, to solve these mysteries, to solve them for the good of all men and for the progress of all people.